Hello, this is Julius from Basicfinancials. I hope you had a good Christmas and best wishes for 2019. Today I'm going to do a little video about, I'll call it investment, but I'm definitely not an investment advisor, and therefore I'm not going to be advising you how to make investments. This is just something that I read in a book which sort of stuck with me, which I thought might be useful for people to think about. Basically, with investments, it's almost within the system that you're going to end up potentially buying into the stock market when prices are high and sell when prices are low, just because of our psychology, really. People see things are increasing in price. Oh, this is doing well. We should get in on this. Let's buy. And then when things are doing badly, think, oh my goodness, it's not doing so well. Let's sell. And it's a sort of self-fulfilling thing, because when people are buying, the prices start going up. When people are selling, the prices go down. But it always means that you're likely to be buying when the prices are high and selling when the prices are low, which isn't very good. So a way that I was reading about of taking that psychology out of the system would be, for example, if you're lucky enough to have some cash and some investments. I'm not saying what the cash is going to be in, what the investments are going to be in, or even what percentage you should be having in this or that. It's just an example to give to show the concept. But let's say you've got half of your investments in cash, and you've got half of your investments in the stock market, maybe in the form of funds you're buying, for example. Now, what you could do is say, right, we're going to keep that percentage, 50%, 50%. And you'll need to come up with some idea of how you're going to review that. Maybe it's once a week, maybe it's once a month, maybe more frequently. Who knows? I don't know. That's why I'm not a financial advisor. But what you could do is, when you do your reviews, if you see that your cash has become more than 50% of the value of your overall portfolio, then that must mean that your investments are going down in value. Now, you might be worried about the normal psychology would be, oh, okay, investments aren't doing very well, let's sell. But that's not what you want to do. Because the cash has gone up to more than 50%, you need to balance it up again, so you'd be buying more funds. You'd be putting more money into the stock market. So you might transfer money from your cash into your stock market to bring it back to 50-50. What that's immediately done has meant that you're buying into funds when they're decreasing, which might be counterintuitive, but it means you're buying when the prices are low. Now, likewise, if the stock market is doing really well, you're likely to find that it becomes imbalanced the other way. So your cash is less than 50%. At that point, you need to transfer from your funds, from your stock market funds, over to cash, which means that you'll be selling when the prices are higher. Now, whether that's good advice or not, I don't know, but it does mean that it takes the psychology out of it, and it gives you more chance of buying and selling when you would normally want to. Buy when the prices are low, sell when the prices are high. Now, as far as what funds do you invest in, the other thing that has stuck with me in this book I was reading was that we can never really beat the market. There's so many investors, or so many investment advisors out there, software and specialists, as you might call them, doing things to try and find out what's best. There's no way that you can really beat that. So you might as well join them and invest in funds. So if you can find a fund that invests things for you, which isn't too the costs aren't too high. Something below 1% is is pretty normal, but you might be able to get something that's 0.1%. But you have to wonder how much investment advice is going on there. But so I'm not really advising on that. But that was just something that stuck with me, that funds are worth because you can't really beat the market. Anyway, there's two little things that I just thought were interesting. I thought I'd share. So if you like that, let me know. But like and subscribe as usual. And if you've got any comments, let me know. And anything else you'd like me to do a video on. I'll see you again soon. Bye.